Welcome back, students who are taking financial accounting, and we are working on the Chapter 1 problems, the Group B, and this will be on problem 1-39B because we're picking up where we left off in our assigned homework problems. And speaking about that, the best way to do this is to actually try to work through the problem yourself. So if all you did was just jump to the video here, maybe you might want to stop the video and go back and work through the problem yourself. Then look at the answer in the solution manual to see if you were right or wrong, okay? And if there was something wrong, then you might want to, think about why your answer is different from the answer in the solution manual. And then if you still don't understand how the answer is arrived at, come back and watch the videos. Now, this problem here is going to take 25 to 30 minutes, roughly. I mean, that's the guesstimate that they give in the textbook to do this one problem. So obviously I'm not going to, I've learned from the previous videos that I'm not going to try to cram it all in one video. So there will be a series of videos to do this, probably 3 or 4 for this particular problem. So, wherever I'll try to make logical distinctions, like I'll do one income statement on one video, that type of thing. So, just watch the videos as you need, and if you still don't understand something, pause, rewind, and watch them again. And if you still don't get it, then feel free to contact an instructor either via telephone or email. So with that said, let's jump to 39 and go up one more. Okay, that's 40. All right, 39. And this one says, prepare the income statement, balance sheet, and identify certain financial information. Now, since I'm going to be preparing income statement and balance sheet, watch the previous videos. I mean, I started out on exercise 1-28B and 1-29B. 28B was about the balance sheet, 29B was about the income statement and statement of retained earnings. That's where those were the first problems that were presented where you actually created financial statements. So I went into a lot of explanation as to formatting issues with the financial statements and why we do what we do and how things should be set up. So if you're just jumping into this one and your financial statement doesn't look the same, then go back and rewatch those videos and work through those problems. Formatting is important in financial statements. When you're taking a test, sure, you're just losing some points because your formatting is incorrect. But when you're out in the real world, if you don't have the correct formats, then you open yourself up to legal liability. I mean, you're giving that information out to third parties. They're making decisions upon that information, and if it's not correct, they'll sue the company and you'll be responsible. So for those who are accountants, it's highly important. For those in the other business curriculums, realize that what you're looking at, is going to be prepared by the accountant, and you should have some idea as to, what the formatting should be like, because that's how you read, quote unquote, you read financial statements using the formatting of them. Okay, so with that said, we're looking here and it says presented are the amounts of assets, liabilities, and equity, revenues, and expenses of Alpha Company at October 31st. The items are listed in alphabetical order. So basically this is a trial balance for October 31st. Why? Because it lists the accounts and the balances in those accounts. Now, it's in alphabetical order. Our trial balance, when they list the accounts, are by category. So you'd have your assets, then your liabilities, equity, then your revenues, and then your expenses. Okay. So even though these are accounts with balances in the accounts, they're not in alphabetical order. So, it is a form of a trial balance, but not the truest form. Okay, so the retained earnings balance of the business was $75,000 at October 31st, 2013. And we're looking at the information as of October 31st, 2014. So from that, it's telling me that this company has a fiscal year versus a calendar year, because its calendar year goes from January 1 to December 31st. This here is going from November 1st to October 31st, right? November 1st to October 31st. Now, why did I say that? Well, it's, my retained earnings balance was $75,000 at October 31st, 2013. And since this trial balance is for October 31st, 2014, that's 1 year, right? That leads me to believe that the $75,600 on 2013 is an ending balance for that fiscal year. And the ending balance for an accounting period becomes the beginning balance for the next accounting period, right? So the next accounting period obviously starts on 11/1. And this is going to be kind of important because when we create the statement of retained earnings, and we had this issue with the last problem, problem 38, in that the author is using this date, okay, for the beginning date, right? And reality is it should be the beginning date for the accounting period, which would be 11/1, right? Now, obviously the information is going to be the same. We're still going to be using 75,600, right? But I just want you to be aware that when you're looking at the solution and you're looking at that date, it really should be November 1st, right? So let's see here, erased all of this. Okay, so now we're going to, the requirements are we're going to identify each amount shown as an asset, liability, or equity. Okay, notice it didn't say revenue or expense. Okay, it just says, assets, liabilities, or equity. If it's a revenue and expense account, all right, remember the expanded accounting equation, and we've gone through this in the introductory videos and through the problems, and it's the way the book is set up, where we have our basic accounting equation as assets equals liabilities plus owner's equity. But when we expand our accounting equation, underneath equity, we have common stock and retained earnings at the moment. Okay, remember, we're looking at this from a 40,000-foot view. I mean, this is the first subject in accounting, and it's the first chapter, so we're not getting into a huge amount of detail here. Equity has common stock and retained earnings. Well, our retained earnings comes from our income statement. And on our income statement, we deal with revenues, less our expenses, which gives us a profit or loss. And from the profit or loss, we can also subtract dividends, right, which gives us a net income or loss, right, depending upon what that is. And of course, whatever that is gets closed out to our retained earnings. So at the end of the accounting period, okay, as part of the closing process. So by asking us to identify assets, liabilities, and equity, we consider the revenues, expenses, and dividends to be part of the equity, all right, because it's part of retained earnings. Right, then number 2 is to prepare the company's income statement and statement of retained earnings. Remember, we start out with the income statement, then that allows us to do the retained earnings, which then allows us to be able to do number 3, which is to prepare the balance sheet. Okay? And then finally, we're going to answer these questions about the company. What was the profit or loss from the year? Okay, that's going to be found on the income statement. B, what was the increase or decrease of retained earnings for the year? So that's on the statement of retained earnings. C, what is the amount of economic resources on October 31st, 2014? Well, what are economic resources? All right. When you think about assets equaling liabilities plus equity. Okay, that's the financial position. The accounting equation is shown on the balance sheet, and that shows the financial position of the company. Okay, so if assets are what we own, OWN, and liabilities are what we owe, OWE, and of course equity is the investment in the business, or um, the net worth of the business to a certain extent, right? Economic resources, well, that's not something we owe. Okay, I mean, if we owe them, they can't be resources, and obviously they're not an investment in the business because they're a resource. I mean, sure, you could think of it as a resource in that somebody invests money in the business, that gives us cash as a resource, but notice what I just said. It gave us cash. Okay, well, cash is an asset. Okay, so those resources are something we own, right? So we're talking about what our assets are. So for C, we're looking at our total assets. And remember, assets are not just cash, it's receivables, equipment, computers, furniture, land, building, this kind of thing, right? And then D says the total amount owed, so that will be total liabilities. And of course, the difference between the two of those ends up being, what we have as far as equity in the business. Okay, so I'm going to stop here and pick up with doing the income statement and the statement of retained earnings in the next video.